Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to Charts and you know it. Hope everyone is doing great. Awesome to see everybody. All right, so let's take a quick look at the economic calendar, not because it's been what's been moving the market, but because what we need to continue to be really keenly in tune with as we track closer and closer to the eventual rate hikes are the rate of change of inflation growth and different jobs data points. Those are the hot zones that are going to map to ultimately the clarity that we're seeking from this. This is the CME FedWatch tool. I think most of you've probably seen me use this. We have a whole breakdown about this over at Countdown Trader. So if you head on over to countdowntrader.com, we have an entire breakdown on how we use that data to tune out the noise of what's happening in terms of all the speculation. What will they do? What won't they do? What's really discounted and expected by the market versus what isn't. All that's just, killing time on 24-hour cable. We can take a look at what's really happening with the Fed. This is a great post that Trish posted on the 11th. Check that out. It'll explain exactly what I do with this. And all eyes are here. Are we getting a quarter point hike? Yes. The question is, can that 50 to 75 point column continue to move higher to where it's more expected and discounted that the Federal Reserve is going to move that 2 quarter point hikes, right? The half point hike. And the more that's discounted, the higher that second column, that column to the right, is, the less of a shock it's going to create. Shocks happen when things that we didn't know happen. But if there are things that are happening that largely were expected, less shock, right? So that's your shock meter. That's your shock meter right there. So just wanted to make sure we're staying on top of a very common sense approach to understanding macroeconomics from a rate of change perspective. In other words, what's the trend, right? Where is the data and what's the trend of the data? And that tunes out speculation and guesswork and all the noise that is typically associated with macroeconomic, analysis. So, all right. So as always, this show is about your questions. I can see there's quite a few already queued up. So let's go ahead and get into it. Starting off with Azendi. Hey, I joined the Secrets Mastery last week. Awesome. And I was wondering, how do I use the 30-minute clearing range to day trade the first 2 hours? Well, that's kind of a big topic for our 20-minute show, but I've got an even better answer for you. At 9:20, since you're a member now, join me in the Secrets Mastery. Today and every Wednesday is our weekly live trading and Q&A. And we're going to get into, what is the clearing range, the automated tool that I give you all in the mastery to track what I like to do with the clearing range. So it just generally, though, we are tracking the high-low between 9:30 and 10 a.m. After the bell. And then we look for certain reactions around those levels. But that means our first trade really using that, unless there's a gap, unless there's a significant gap, there's really not anything to do till after 10. In between that time, 9:30 and 10, we are also looking for V-score. I've given you all my specific slow stochastic setting. We're looking at our hourly price movement ranges, which is another tool that I give you all within the mastery. The mastery has a treasure trove of indicators specific to you all in that room, because I can show you how to use it and we can update them and everything. So there's a lot of things that we'll do before that. So it's not just about the clearing range, although I love that classic old school type approach to day trading, but we'll use a lot of other tools as well. So I look forward to seeing you at 9:20 there in about 14 minutes. All right. Okay. Next up. Hey there, Julian. How do you set up screens in TOS to see sector ETF with the most weighted stocks? Thank you. So on Thinkorswim, I've just created a 12 chart layout. You can put as many individual boxes as you'd like. So you're basically going to create a grid with 12 boxes. I tend to have one big box for the tide and then 11 smaller ones, and it just balances out really nicely within the frame of the screen. And then I head on over to Yahoo Finance or ETFDB, or you can within TOS even populate the boxes in the order of their percentage. So that's really it. It's just a little bit of a text setup. And then once you've got that, you're all set. Now, what I do to that specifically, once you've got the layout, is the tools that I've given I've given to all the rooms, futures, options, sector secrets, and I believe it's in the day trading room as well. The JT trade flag labels, the green and red. I don't have TOS running at the moment. I guess I can go ahead and do that right now. The green and red, yellow labels, then put that on each one of the boxes so you can see the outperformance amongst the stocks. And that's really it. All right. Okay. So actually, while I'm thinking about it, let's go and log into TOS. Okay. So moving on, Andrew, in a non-trending environment, will I rely on the slow stow and fib levels for trade exits and entries? Andrew, very often I will. Yes. So by the way, kind of going back to that question earlier, and just bear with me here. All right. So going back to that question earlier about the layout, this is what I typically do. And then notice I've got all those free tools that you can get over at Countdown Trader running. So we've got wave, grab, propulsion, and then I do not have the labels at, you can see right here. So by the way, this is a flex grid. I think they call it a flex grid within TOS. Okay. That's TOS's official name. It's a flex grid. So you have to organize it, structure it. But the labels I only make available to members. So for those of you who ask, Rog, where do you get the labels? They're free, but they're free to members. Okay. And then there's a couple other perks within the mastery where I make available the JT multi-trend and a few other things. But anyway, that's what that multi looks like. Okay. So, and I believe, and a lot of folks have asked, Rod, can we get the labels on TradingView? And I do believe the Lorna bot is on it. So it's just a matter of just some time, but the Lorna bot is on it. So we can get the labels on TradingView as well. Very excited. So yes, Andrew, what do I do with a choppy market? I'm a big, look, the only time to ever use an oscillator, like a slow stochastic, I would throw the RSI in there, is in a choppy market. So when I've got a neutral trend and wide Darvis, a wide range, then I will absolutely use a slow stochastic. But I do it with a very specific setting. I've always made this setting freely available. This is the free version of TOS. And you'll notice it's an 80-20 high-low, right? 80 is the high, 20 is the low. And then a 21K 3D. And then if you're on TOS, just turn on those arrows. You're going to have very clean, very selective breakout signals rather than a very noisy type of slow stochastic. So, and make sure your average type is exponential. You're all set. Okay. So yes. Do I use Fibonacci as much in a trending environment? I really don't have to because of propulsion, wave, and Darvis. But Fibonacci is always applicable when there's a good, clean last major move to rely on. Case in point, here's the Dow. Grab the Fibo tool. Notice how the Darvis 3.0, the Darvis signals makes pulling the Fibo really easy, arrow to arrow. Boom. Take a look at where we stopped. 50%. that 50 to 618, that halfway to golden mean, there's magic there. And the reason is, remember, Fibonacci is not a trading tool at all. It's far more important than that. It is a mathematical law of nature that we happen to apply to the nature of the markets. Am I still long? Natty gas. Ronaldo, yes. We never hit our premium threshold on natty gas. If there's anything that I wish I would have done tactically, I would have put us in a second conservative entry in the mastery. But yes, we are long this, the mastery. This is a setup via the UNG calls that we are long. So here it is heading up towards that 50, heading in absolutely the right direction. We took heat on this one. I don't want anyone to think that we don't take heat on our trades. I'm up to my eyeballs and listening to, out there in the traderverse. Look, we take heat on trades. What is heat? It's unrealized loss. If you cannot sit through the unrealized loss, you cannot take advantage of the trade. So budgeting and affordability have to be part of the conversation. Who cares what I ultimately made if the trough that we had to sit through wasn't affordable? I always like to bring up, and this is no knock to him, Michael Burry syndrome, right? From The Big Short, from the movie. Yeah, he made $2 billion, and that's the punchline. Does everyone remember how much the drawdown was in his fund before he hit the ball out of the park? The road to that victory was littered with other traders who had Michael Burry type trades on. He wasn't the only one, right? But they could not sit through that. They could not, if you remember from the book, if you remember from the movie, he did not allow any redemptions. He locked people in so the fund wouldn't implode. Minus that, there's no victory. So we got to be realistic. And I put that on the pressure of us on this side of the camera, on this side of the mic. We have to be straight up about risk. And part of risk is sitting through what I call paper cut levels. We never want our debit on, and this is something I do in the mastery. We never risk max debit. And when I say never, I mean never, right? So we have to be straight up about sitting through some unrealized risk. And I had a little bit here. And then now, because we were able to withstand that, we knew what it was going to be, meaning we know what our threshold is before the trade. And now we've got a nice trade in our hands. So, I think it's really important to be straight up about these things. And yes, still in natty gas, my friend. All right, next up, David asks, any thoughts on the IWM and the impact of the PPI? Well, so, when we look at PPI reaction, we just go to the short-term time frame and see what the reaction was. Here's your post 8:30 reaction. Look, Russell's heading down in the direction that, well, we set this trade up. So all my cards on the table, I'm in this trade. And this is a Russell short or IWM long puts, depends on your comfort level with overnight swing trades. And this is just rallying into the wave in what has been largely an overall downtrend. Okay, so you take a look, it's neutral right now, but don't let that fool you. Right? It's neutral right now, but don't let that fool you because the trend that preceded was clearly down. Bearish momentum, bearish trend. That means that we're going to stick with the short side of this trade. And so I don't know that PPI is the reason for my short. I don't know that high inflation is the reason for the short. David, I'm not really worried about the why at this point because I've got good structure. So I know that within all the reasons that are moving price in small caps, IWM, Russell futures, I've got the kind of structure that I can short. And this goes back to, I think, a very, very difficult thing for a lot of traders to do. And that's just trade what you see and don't get engaged in sort of the chatter about the markets. But I totally hear what you're saying. Is there a catalyst? I think that catalyst has already occurred, my friend. So great question. We're short, and I'm going to stick with that. All right. How do I choose which expiration date to put an option on? XLY. I want to give myself as much time and liquidity as possible. So Tracy, what I do, whether that be a trade in the options room, whether that be a trade in the mastery or even if we're trading, in terms of futures. Time is important. Yesterday in the futures room and in the premium video, I went into a lot of in-depth conversation about which contract do we trade even in the underlying futures contracts. Because, for example, with crude oil, we're very close to first notice date. I don't want to be, giving myself really less than 2 weeks to let a trade work. So it doesn't matter if it's options or futures. If we have something where a contract is going to expire, we want to ask ourselves, am I giving myself enough time to let it work? Right? So I try to give myself enough time and liquidity as possible. I usually don't want to be less than 45 days. That's sort of a guideline for me. All right, next up, what are the key levels for the ES today? Well, I don't look at SPX. I'll look at ES, my friend. So I don't know. You mean talking key levels intraday, key levels end of day? It just depends. So the levels for me that are most important are going to come in two ways. They're going to come, well, I'll show you here. You know what? Let me do this. For me, the levels are volume-based. No, the levels are volatility-based. So you can see what's already running on my chart. Got my hourly price movement ranges up. I've got my Darvis up. And then I've got my value area high-low and point of control. Now, if I want to add volume ledges to that conversation, then I can head on over to TradingView. And you see how I have these volume ledges in here? See the volume histogram running vertically along the right side there? This is very easy to understand where those volume levels are. It just depends on, this is a visible range, by the way, visible range volume profile. So this is where my ledges are going to be. And they change. They change, moment to moment, depending upon where the volume is coming in. And then the other thing that I'll do, quite frankly, when it comes to understanding volume is I'll use a tool like this. I'll get right into where the liquidity and everything is. So I'll use something like a book map, right? But I won't determine that before 9:30, because remember, at 9:30, now the volume comes in. The ranges that we set the first 5, even the first 30 minutes, I'm going to pay attention to those and then see what volume is accompanying that. Where is the point of control that's established in the clearing range? Things like that. So I don't believe it's, unless you're looking at pre-market, which remember, pre-market, we can put in different volume levels, but they're going to be far, far lower volume levels than what we'll see after 9:30. So I try not to make too many major decisions other than, are we going to open with a gap? And things like, are we going to trade above the previous session close, below the previous session close, basic things like that. So thanks for the question, Noel. So everyone's probably comes across a different, I don't know if key levels is something specific. I don't know if that means something specific, but that's the way that I do it. All right. And it's very basic. It really doesn't need any fancy tools to do it. Did I add Coke? So Tim, we know what our triggers are. If the trigger is met, I don't use the word add, but I know what you mean. If our trigger is met, what happens? My alert goes off just as I teach you all. Once the alert goes off, I'll go bid on the option. So everything comes down to, is the price alert that is associated with the trade that I sent out to you, is that criteria being met, right? No trigger, no trade, as it said. So yes, absolutely. Let me mention this, and thank you for all the questions about the mastery. I mean, it's a labor of love. It's my main clubhouse, and I do appreciate the questions. Look, I don't want anybody here at Charts and Coffee believing that they have to go buy something from me. You don't, gang. Benefit from Charts and Coffee, benefit from the free videos. And then if it seems like I might be the mentor for you, great. But take the time with all the free content that we put out on Countdown Trader, the free videos, and here on Charts and Coffee to make sure I'm the right mentor for you. Please, that fit me. It's very important to me. I don't want to waste your time or, frankly, your resources, right? Okay, but having said that, a lot of folks have asked, On March 9, pencil that in, right? On March 9, I'm going to walk you through my free tools that I've made available, as well as what we've been doing in the mastery and how we trade and how to use some of those free tools to put on the kind of trades that I put on, both intraday and end of day. So if that's something you're interested in, I would really tell you all, yeah, am I kind of telling you don't sign up today? Yeah, I guess I kind of am. Check out what we have coming up, because I think for a lot of you that have been wanting a sort of lower barrier to entry and maybe a sample of what we're doing, we have a really great offer coming up. So yeah, I'm the worst salesperson in the world, because I'm not. But March 9, I think it's going to really help a lot of you. With that being said, I do need to head on over to the mastery right now. And we're going to be doing some day trading. We're going to take a look at our open trades, of which we have quite a few. So I will see you all there. And everyone else, thank you as always for being a part of our Caffeinate and Dominate crew. I'll see you tomorrow. And by the way, I know the markets are closed on Monday, but we will have a Charts and Coffee on Monday, probably one of our bigger, longer sessions. So if you have other questions this coming Monday, I know the markets are closed, but we're going to be here. Be good to each other. I'll see you tomorrow.